Hey guys, the first thing you have to do when you first get into the stock market is to find out whether you're trading or investing. A lot of people ask me what the difference is, and the difference is fairly simple. Investing is when you go for a long period of time in the stock market and try to gain appreciation of the underlying stock or receive dividends to help you gain income. Where trading is mostly a short-term type of gain, and you're just mainly doing either day trading or swing trading within the course of a few days, even a few minutes or a few months. It's so important to establish, especially if you're trying to go into a specific stock, it's so important to establish whether this trade is a trade or if it's a investment, because the time horizon you would have on that specific stock is going to be dependent on that specific flat. So when you go into a trade, you're mainly trying to get out quick. You're trying to, ride a short momentum upward or downwards and get the appreciation or depreciation in value of the underlying stock. So in an investment, you're trying to just leave it and just forget about it. That's an investment. Fidelity actually did a great study on investment and the best performing portfolios that they have dealt with. And there's two things that common between the two. And one is that they're either dead people or they were inactive portfolios. So that goes to show that if you just leave a stock within the portfolio or the companies you trust in your portfolio and don't even just look at it, that throughout the time it's going to appreciate in value because everything adjusts, whether it be inflation, etc., or whatever the case might be. And sometimes when we get into a trade, we don't necessarily think of it like that, and I have the same mistakes that I'm actually talking about, where I will go into an investment, but then I'll play it like a trade. So I'll get into an investment, it appreciates in value, 20% or whatever, and I'll just sell it, and then it ends up going 100, 200, 300% above what I sold it for, and I get mad. But I think this is a huge problem that everyone has. Or even if the stock was to go down, and when it goes down, we're like, we got to get out. But we don't remember the underlying purpose of that specific trade. It was an investment, not a trade. So why are we getting out with short-term movements? Because nothing about the company fundamentally has changed. So we have to think about it like that. And when you determine whether you're going to trade or invest, although I do try to tell people that investing should be their primary goal, you should never trade 100% of whatever capital you have. You should always be investing that money and only trading a percentage of whatever you have, because when you are trading everything and all the money that you have, a lot of it is going to be in the psychological level, and you're going to exit the trade or whatever the case might be because that's all you have. So for example, you get into a good trade, perfect plan, but you put all your money into it, and that stock doesn't go in your direction or whatever, because sometimes we need to let it play out and it doesn't go into your direction. You start to lose 15-20% and you get afraid and you sell it. Now you lost money, right? So we have to know that trades sometimes takes time to play out, and when your brain is so focused on thinking about losing all that money that you put in, it's going to influence your decision on how to get out or in of that trade. So make sure you don't trade with everything you have, and it's not a get-rich-quick scheme, and just take your time and let things play out, and you'll be quite successful. If you have any questions, make sure to leave a comment below. I'll try to get back to everybody. Drop a like and subscribe to the video, and we'll talk more about trading, investing, and just business in general.